I would say grouping of denial codes is another area where we're seeing large successes with organizations. So when you're going through your denials, I think we talk about this a lot. A lot of organizations think that denials are just kind of a way of life. Some of the claims you submit are just going to get denied. But Kim and I say all of the time, and we preach this to everybody we talk to, you did not submit that claim with the intention of it never being paid. You didn't put that effort in and have your biller do that because you thought you weren't going to get your money in. And so claims are something we should be focusing on from a preventive standpoint. Those really high performing facilities that we're seeing are taking all of the denials and reviewing the codes that are coming back from the denials and then grouping those by department or by workflow or by service or location, looking at things in a variety of ways to really kind of get some additional insight into what's going on, and then using that to drive action.
Welcome to Medical Money Matters, the podcast where you can find experts, answers, and resources so that you can achieve mastery over the financial and business aspects of your practice. Hello, everyone. I'm your host, Jill Arena. I started my career working in accounting and finance, and I have more than 30 years of experience running medical groups. I own and operate a national healthcare consulting and revenue cycle company, and I am the author of Physician Heal Thy Financial Self. In 2020, I co-founded the Physician Leadership Project, and my passion is to increase financial and business literacy for physicians. Welcome, everyone. I am delighted to be joined today by two national experts on revenue cycle, Kim Tolliver and Taya Gordon. Welcome, ladies.
Jill, it's so great to be here.
Thank you for having us. We're excited. We're on the other side of the microphone today.
I am delighted to have you both. So Kim and Taya are, as I said, national experts on revenue cycle. They both host a podcast called Rev Divers, which you can find on Slice of Healthcare. And I was delighted to be a guest on their podcast about a year ago. And so here we are to talk about revenue cycle. Kim and Taya, between the two of them, have 5 advanced certifications, all around the business of money in healthcare, and especially around the revenue cycle. So they also both together literally wrote the book on revenue cycle as published by MGMA. So we will put all of the links to those resources and background for Kim and Taya in our show notes so folks can find them. They are also national speakers at a lot of the Medical Group Management Association conferences, state and national. They are regularly invited as speakers to the national conference on all things revenue cycles. So you can also find them on LinkedIn, which is great. You can follow them there for updates on what's happening in our revenue cycle across the country. So ladies, thank you and welcome. I am so delighted to have you both here as we're getting into the business of revenue cycle today.
We're excited about it. I think more people need to talk about it, right, Kim?
Absolutely.
Yeah.
Glad to be here.
We'll get this podcast started. We have, in our first few episodes, as we discussed earlier, we have been starting with the financial terms and getting physician audience more familiar with the language of finance. We have talked a little bit about financial statements. So the balance sheet, the profit and loss, the statement of cash flows. We've talked a bit about budgets too. So, and part of that journey, we have been talking about the revenue cycle. And so we've been getting started with a lot of learning about finance and business. And my first question for you two ladies is, what are the top 2 or 3 things you think physicians need to know about their business?
Taya, I'll let you kick off if you want. I mean, I have a lot of thoughts about this, but you and I actually are talking about
it. Whittling something like that down to just the top 3 is tough. I think if I could only say 3 things, I would say One, your revenue is not going to come from working in a silo. Your revenue and whether or not you are receiving it starts well before the patient's seen, and the activities that take place well after they've gone are all critical components of whether or not you're going to get paid. And your staff, you can never invest too much in their education. If I kind of could only give 3 points, I think those would be my 3. Cam, what about you?
So I was actually going to really hone in on the third point, which is staff investment, workforce investment. It's critical. Physicians, we expect you to, see your patients and provide that excellent quality of care. But we also need to make sure that our staff understand their roles, their responsibilities, how they impact the organization, and providing them with the resources and the tools that they need to be successful for you within your organization is a huge component of your success.
And that doesn't mean that everybody has to have an MBA. Cam and I love to jump in and say that because I have my MBA, but I got it 10 years after being in the industry. Having education and knowing what you're doing doesn't mean every one of your staff members has to have an MBA. That's a myth we like to bust.
Right. But then also we want to make sure that we understand the skills that our team members need. And maybe you as the physician, you're not quite sure what those skills are, but having someone within your organization who understands the skills that are necessary for each of the roles that your staff play, that's going to really help you understand the investments that need to be made.
Fantastic. I like to say that I assume everyone shows up for work wanting to do a good job. And so if things are not going as you'd like them to go, or you're not getting the results you'd like, the first place to look is your training and how, yes, exactly to your point, how you've invested in your staff and if they have been given appropriate training to the right workflows. And if things
Yeah.
are not happening the way you want, perhaps it's a training issue. So,
Yeah,
mhm.
absolutely. And Jill, we all know that the reimbursement guidelines are so complex. The regulatory guidelines, they overlap. So really honing in on that education is what we're going to recommend.
Wonderful. Well, we have talked a little bit in the past, and as part of your podcast, when I got to be a guest there, about how we teach, well, we don't teach physicians business when we're training them to be clinicians. So this even applies to how they get paid. We really have very little education about the reimbursement system. And as a result, many physicians are in practice for many years without a really good understanding of how it all works. So, my next question for both of you is how would you suggest that the physicians who are curious to learn more about their revenue cycle?
So, one thing that we really hope physicians understand better are the rules that go into this game of revenue cycle management, right? And that really starts with understanding each individual payer's reimbursement guidelines. No payer has the same reimbursement guidelines. Many of them follow Medicare's kind of lead, but all of them have their own reimbursement guidelines. So investing time working with your staff, because your staff are usually going to be the folks who are educating you on those reimbursement guidelines. So making sure that you have access to those reimbursement guidelines. Every insurance company has some sort of reference tool that can be used, whether it's online through their portal, their there's newsletters and bulletins and cheat sheets. Medicare has a Medicare Learning Network that you can subscribe to. So really kind of getting involved in your specialty specific, geographic specific resources is going to be one of those great opportunities to understand better.
And I think that in addition to that, you really want to make sure that foundationally that you and your staff understand how you get paid. So when we're looking at those payer guidelines and those recommendations of what we need to do, you have to understand how those things tie into each other, right? So what's that full life cycle of the claim? And how we get paid isn't really just we submit a claim to the insurer and then they tell us what we're going to get paid. It's a very complex working system. So if you don't understand the full revenue cycle and the life cycle of the claims, then reading those payer guidelines and all of that is not going to be helpful to you. So you kind of have to know foundationally that revenue cycle, and then you have to dig into those guidelines, like Kim is saying. They are variable by every single payer and every payer's plans and all that. It's a very complex machine there. If you don't understand the inner workings, what's that saying, Kim, that we love to say? If you're not at the table, you're what's for dinner?
You're on the menu.
On the menu. There you go. There you go. So you really have to know what's going on and get engaged in those things to understand and to make sure that you're doing them as optimally as possible.
Wonderful. I appreciate 2 points that you made. One, Kim, you called it a game, and I like to refer to it that way as well, not to minimize it at all, because it's a very vital part of every practice, but to
Yeah.
call out the fact that it is complex, the rules are ever changing, and I think that the healthiest way to look at the revenue cycle is as a game, and we all want to win the reimbursement games. So,
Right.
it's excellent, yeah. And then, secondly, that your staff can be a really valuable resource for your learning, and
Yeah.
the I will say a good medical biller with a lot of experience is worth his or her proverbial weight in gold. They know how to get claims paid. They can teach you if you ask them, and they might be really flattered if you came and sat down with them and asked them. And it's, I think, my advice to physicians doing that, not to freak out your billing staff, but to sit down and say, I'm really curious and I'd really like to learn more. They might be a little intimidated if you suddenly show up in their office, start asking a lot of questions, but if you express a true natural curiosity, it's probably a great lead in for that. So, um,
Yeah.
well, I am curious to hear from both of you about what you see happening across the country in the highly performing practices.
Mm, Gosh, there's so many um, really good success stories that we could share, and maybe not so much, But one of the success stories that we see across the country would be organizations who are minimizing their aging AR buckets, right? So we're typically familiar with the 0 to 30, 31 to 45 or 60, 60 to 90 days. And these are the time frames in which our money is aging, right? And what we're seeing in those high performing organizations is that they are decreasing their aging AR buckets. And this is something that Taya and I kind of mentioned in our book, is because our claims are being submitted electronically now, there's no reason why we shouldn't have a 0 to 14 aging bucket, right? So, what we're seeing across the country is organizations who are prioritizing getting started sooner with their accounts receivable follow up. They are being able to increase their cash flow, reduce denials, have better successes with their revenue velocity. So I would kind of start off with reducing your aging AR buckets, starting with 14 days.
Yeah, and I think in alignment with that, I would say grouping of denial codes is another area where we're seeing large successes with organizations. So when you're going through your denials, I think we talk about this a lot. A lot of organizations think that denials are just kind of a way of life. Some of the claims you submit are just going to get denied. But Kim and I say all of the time, and we preach this to everybody we talk to, you did not submit that claim with the intention of it never being paid. You didn't put that effort in and have your biller do that because you thought you weren't going to get your money in. And so claims are something we should be focusing on from a preventive standpoint. Those really high performing facilities that we're seeing are taking all of the denials and reviewing the codes that are coming back from the denials and then grouping those by department or by workflow or by service or location, looking at things in a variety of ways to really kind of get some additional insight into what's going on, and then using that to drive action. So if I see a bunch of denials that are all based around eligibility and benefit errors, or patient cannot be identified as our insured, I know that I need to invest some more education into my front desk and my intake staff. And so we see those high performing facilities, to Kemp's point, they're looking at things quicker. They're looking at things in a different way, and they're not doing things the way we've always done them.
The notion of your accounts receivable as an asset is something I always want to talk with physicians about. And looking at it, I have frequently said when we go into clinics that are in crisis that their accounts receivable needs some urgent care. And I love the notion of going at it from a preventive standpoint and thinking about that. And hopefully our physician audience can get that you want to go in and you don't want to be treating a lot of symptoms. I mean, that's basically individual claim follow-up on denials would be treating the symptoms. If you really go after, what's the disease process, and to your point, Taya, if you're sorting claims and really looking at denials by denial reason, and getting after systemic fixes of that, much healthier. And then I'm completely intrigued by the notion of an aging bucket that's 0 to 14 days. I love that. That's something we'll be looking for within our clients' systems. I hear from our rev cycle teams that we're seeing clean claims adjudicate in 5 to 10 business days, sometimes 15. But the payers are getting faster, which is lovely, when the claims are clean and they can go out.
Well, and if you get a denial back and you get it back within 10 days, by 10 to, let's say that one takes 10 to 14 days, but you don't review it until it hits 60 days in aging, all the things that could have happened between then, you could have seen the patient again, you could have additional charges. There's all kinds of bad things that can occur when you don't look at that information sooner. And I suspect, and that's way out on a limb, but I would suspect that we're going to see timely filing and timely appeals windows start to shorten as payers continue to get more proficient with responding to those claims. And that might be a little ways down the road, but I suspect that we'll see that. So we need to get just as proficient as they are in that processing timeline.
Absolutely.
I agree. Yeah, I agree, Taya, and that phrase makes my blood run cold too, that the timely filing windows might get shorter.
Timely filing drives me crazy anyway, because did we perform the service or did we not perform the service? Okay.
Right.
Yeah. It's that's one we bump into a lot, are those the timely filing, and we see groups where if the registration isn't done appropriately, to your earlier comment about when you're looking at denials and sorting for reasons, if we have an incorrect insurance and we send out a claim that doesn't get adjudicated and denied for 30 days, and then we have to be back in touch with the patient to get their new information to get it out. If there's any lag in there at all, we can be knocking on a 90-day timely filing really easily.
And it typically there's going to be lag in there.
Absolutely.
Yeah. But you brought up a comment, Jill, that we should look at our AR as an asset, right? And it really is. Like when we help physicians with acquisitions or mergers, part of the practice valuation process is looking at the accounts receivable, right? So this is an opportunity for physicians to kind of take control of that asset, right? By understanding those reimbursement guidelines, by investing in their workforce, and by making sure that there are preventative measures against anything that would negatively impact that asset.
Oh yeah, this is your family and medical history of your financial outlook, okay? Like if we were going to go through and try to treat our finances as if it was a patient, and we're looking at the revenue cycle, if we're not looking at what we've done and what's sitting in AR and what was denied, and we're not looking at that history of performance, it's like we're treating a patient and we have no idea what their history is. We have no idea what their family history is. And so we may just be treating symptoms. We may not be treating the root cause. We may not be making systemic change. We may be putting a Band-Aid on something that needs surgery. So we really have to make sure we're using everything at our disposal for evidence-based management, which is really at the heart of everything physicians do, right? The evidence-based decision-making. So once we can connect those dots, right, we can get to really much more profitable and long-term viable solutions financially.
Yeah, and what we kind of term that evidence-based management and revenue cycle management is revenue integrity. So physicians are using, evidence-based clinical models, and we are looking at revenue integrity business models.
This is fabulous. I'm getting new vocabulary. I love the analogy. It's great. And I really do. And in my conversations with physicians, I look for ways to take business concepts and business processes and create an analogy or liken them to something that they've learned in medicine. So that's a great crosswalk. I love it, and I love the notion of revenue integrity as well. That's so fantastic. Next question for both of you would be to go over to the flip side. So we've talked about what's happening in the highly performing practices. So now I'd like to hear from you about what you see that's happening in practices that are in crisis.
Well, Taya, I can kind of hop in here. I think one of the areas that we regularly see with organizations who are in crisis are cumbersome and manual processes that require their workforce to do so many extra steps, extra labor. And guess what happens there is there's room for human mistakes, right? Human error. We're all humans. We have folks who are working remote right now who are in revenue cycle management positions. So what we're seeing, unfortunately, is although we have access to technology, what ends up happening is that technology becomes a burden. It becomes cumbersome. We have all these technology stacks, and we're not interfacing and having technology communicate with each other.
It becomes a liability.
What's that, Taya?
It becomes a liability, the technology at a certain point when it's being, I don't want to say misused, but poorly used and poorly educated to and trained on with the staff, poorly utilized just in general. It becomes a liability to the organization. We see it all over the place.
It's an excellent point. We see a lot of purchases, so an initial investment in software and implementation, but then not a lot of follow-up with continued training or continued improvement in the workflows. Even when the software has upgrades that might support a new workflow, we see a lot of practices missing out on that. Yeah. What other
Well,
things
I
do you
feel
see?
like we're also in a place where whoever implemented the technology may not necessarily be there anymore in a lot of these facilities, and so you have this knowledge transfer that's not happening very well. And so, like, if any of our clients were to listen to this podcast with Kim and I and you, they would all think that we are talking about them. That's how prevalent this issue of technology is. And they would all be like, "Oh my gosh, I heard you talking about us on your podcast." No, it wasn't you, it was all of you. All We're seeing this issue all over the place, and I understand it because we worked in it. And how many of us as practice administrators or facility coordinators have the ability to step back and go, you know what, let's make sure we're using our existing technology efficiently? I have a ton of time for that. We don't, right? Which is, again, why you have to look at what the data is telling you, because to Kem's point, those can be big issues. They can be significant. Primarily what Kem and I work in is what I like to call rescue and recovery. We would love to say that the majority of our clients are people who are like, hey, we want to just keep advancing the ball. We want to keep getting better. We want to optimize. But unfortunately, right now, there's so much strain on organizations and on physicians that most of what we get is rescue and recovery. We need help, and we need to know how to not get into this situation in the future. And so much of that is coming down to their use of technology and the workflows that are so manual.
Yeah. One of the other problem areas that we're seeing is coordination of benefits, especially in virtual care delivery models, because you don't have the patient there in front of you, right? So being able to capture all insurance and discover all insurance plans for a patient can be an obstacle in virtual care delivery environments, even in person, because there are there's so many needs when we have that that patient in front of us. We're trying to get them checked in quickly. We want to keep them safe from COVID. So there's a lot of, kind of competing priorities. So, I think the other kind of prevalent issue that we're seeing of late is coordinating those benefits, making sure that we're verifying insurance, capturing the right insurance in the correct sequence, so that those claims go out correctly the first time.
Yeah. One of my observations with our clients, and then I also have the experience as a patient myself or as a patient's mom, is the great variation in patient portals that are out there with the different tools and the great variation in the usability and functionality of them from a revenue cycle perspective. So, how easy is it for me as a patient to register as a new patient with a practice through their portal? Or am I asked to put my credit card on file? I would still say altogether too infrequently. I am asked to put my credit card on file. What do you see in the market for your clients in terms of useful patient portals?
Well, I'll just say Taya and I recently did a program for MGMA on the financial pain points from the patient's perspective. And gosh, as we think about those pain points for patients, a couple things aside from the patient portal leading up to the patient portal would be patient statements and um, I guess the usability of patient statements from the patient's perspective. And Taya, I'm going to let you hop in because I know that you absolutely are very passionate about patient statements, but but then also thinking about how we're optimizing our patient portals. And nationally, we all want to do a really great job at optimizing the use of our patient portals. But there are new regulations related to patient access, right, through the Cures Act, and making sure that patients have access to so much more information than what we had given them previously, right? So we want to also take into consideration, aside from the clinical aspect of the patient portal, how we're optimizing our patients' ability to connect with us financially and making that a secure process. And then also making decisions on how we are going to share financial information with our patients through the portal, allowing them to give us credit cards on file or allowing them to be able to view their e-statements online. But Taya, I know that you have a lot of a lot of thoughts about this as well.
Oh man, I do, because I find it so frustrating and it's something I dig into quite a bit. And yes, having your patient portal and access to it as a patient from a clinical perspective is fantastic. But for a practice, it's a key component of getting your money in. And so we just taught a session in October for MGMA, and it was on the barriers that we create as provider practices and facilities to our own revenue cycles. And I gave this example because this was real life with my daughter. I told you I have a 2-year-old, and she cut me across my eye with her fingernail on accident. So I'm like, I need to go see an ophthalmologist. I call in on the phone. Or like, we can see you, come in this afternoon. You haven't met your deductible yet though, so it's going to be like $250 when you come in. Just pay at check-in. I'm like, good on you. I like this. All right, I'm coming money prepared. I love it when they tell me right up front. I get up front, she checks me in, and I say, I haven't met my deductible, so I need to make that payment. And she goes, no, you don't. And I said, no, no, no. I talked to the lady on the phone already. She checked my benefits. She's like, oh, you know what? They do that at checkout. Don't worry about it. And I was like, okay, red flag number one. You take money when it is offered to you. Okay. Didn't say anything. Went in, saw the doctor. I, got my medicine. I can see now. So we know that went well. I went out, went to the checkout counter, and she goes, okay, you're all set. And I said, no, 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 I haven't met my deductible. I need to make this payment. And she goes, what? And I said, I need to make this payment. And she goes, oh, we don't take payments at checkout. You needed to do that at check-in. And I said, I tried at check-in. She told me I need to do it now. She goes to get a manager. The manager comes over and is mad and goes, can I help you? And I said, I just want to give you guys my money because I haven't met my deductible yet. And she goes, right, we'll bill you for that. I
Wow.
said, okay. So I left. About 45, 60 days later, I got a bill in the mail. And I'm like, wow, that took you guys a long time to figure out what this lady, someone in your practice knows what needs to be done, right? So I go online, try to pay my bill. I can't find anywhere to pay it online except their patient portal. And I'm like, okay, at least I can pay it through the portal. Nope, you can only pay through the portal if you have an account set up. Like, all right, let me just go ahead and set up an account so I can give them this money that I tried to give them in person 2 months ago. I can't set up an account unless I have a special code from them that I can only get in person by presenting into their office with my photo ID. And at that point, I was like, forget it. You guys get a check in the mail. I, I could not believe the number of barriers that were in place, and finally had a conversation with the practice manager. And I said, someone in your organization knows what to do. She went in, did some digging. Turns out it was a new employee who had just come to their practice. And she had the education to know to look at this eligibility and benefit information. So she was doing that. Someone in their department told her, you're not supposed to be doing that. That's not how we collect from patients.
Wow.
So it spurned an entire re-education process in their organization, but they delayed their own revenue cycle by 75 days.
And I hope they're now
No,
a client of yours, Taya.
they should
I
be.
gave them that education, and then I think they were just like, we don't know who this crazy person is that wants to give us money. We got our money, and now she's gone. Like, I don't think they want to talk to me much anymore. No, I'm kidding. But we covered that bit of education, and now they reach out when they have questions. But
Yeah.
what? It was just
But
crazy to me.
Jill, this is not uncommon, and
It's not.
many physicians are unaware of this process, this cycle that's happening within their organizations.
Hmm. I wish that I could say that I haven't had a similar experience, Taya, but I have. And I'm like you, I'm
Yeah.
there with my card in hand going, I need to pay you something for today. And I frequently get confused or no, you don't, or we'll bill you. I actually told a woman over a front desk, you really shouldn't bill me. It costs you a lot of money to send me a statement. You really should take my money
Yes.
now. And she looked at me as though I was a little bit of a crazy lady too.
Oh, they
It's
always do. They always
yeah,
look at you like you're crazy. And you can't ask to speak to the manager right then because then they're like, what did I do wrong by not taking your money? You don't owe us any money. So you have to wait and like call in so you look a little less crazy
yeah.
trying to help them out.
I I try to make co-pays and they say, "Oh, we'll bill you for that," and it
Mhm.
gives me a headache. Oh Lord.
I can't remember the last time somebody accepted my copay over the desk. They just always will bill you.
Mhm. Ah. Well, and I think for our physician listeners, the cost of mailing out a paper statement, which I hope most groups are not doing anymore, although I still receive them as a patient, is $15 to $18, $20. What's the latest figure on that? Cost all
Yeah,
in,
I think
staff
last I
time
saw
and
was around
yeah,
18 all in,
yeah,
staff time,
yeah.
mailing, postage, all that. Last I saw, I think all in was around 18.
Yeah, so if you're spending $18 to collect a 20 or 25 or a $30 copay, that's a big chunk right out of your revenue. And especially if you have a
Sure.
patient like Taya standing there with a card in hand ready to pay at a time when it costs very little. Yeah. Or if you have a card on file in your system and that copayment can just get automatically charged. Yeah.
Right?
We have seen with some of our clients very successful implementation of electronic statements, and so our patients can pay on their phones, and that's typically the highest success rate of getting people to pay is text them a bill, and with three or four clicks on their phone, they can have that thing handled. So I believe that's where we're going. I think we have a ways to go within the industry.
Yeah.
Well, I would love to shift gears a little bit more over to the dark side because one of our upcoming episodes is going to be about embezzlement. And I know that you two likely have a good war story or two that you could share with our audience. To tee this up a little more, I believe the national percentage for practices that are embezzled is somewhere around 83%. So incredibly high, inordinately high, my humble opinion. And there just are a lot of things I think practices can do to not really embezzle proof. I don't know that it's possible to get 100% embezzle proof, but things they can do to make themselves a little less susceptible to that. So that's a
Well,
two-part question. What's your best war story? And then what would you recommend for our physician listeners about how to avoid it?
So I do unfortunately have a war story. I can at least talk about one.
We
There
both
was
have at least 10.
yeah, unfortunately, but this one is a front office manager embezzling co-payments, and the solution was having internal controls. So at the time, there wasn't really a ton of internal controls. You had one person handling multiple layers of a process, right? So just making sure that you have multiple people involved, that you're using technology so that you can track things, and that you're doing a reconciliation on a regular basis. So when you lack reconciliation, when you lack internal controls, when you lack accountability, that really is a breeding ground for embezzlement.
Yeah, it's always going to come down to internal controls. And Cam and I have seen everything from people stealing cash over the front desk and cash and petty cash to, creating a bank account and setting up one of the payers' EFT payments to go to their own bank account. So sometimes it's not complex. Sometimes it is complex. Sometimes it's your new employee, and sometimes it's the employee that's been there for 20 years that you would trust with your life because they had every intention of paying it back and they never meant to do anything, disrespectful or mean to the company or make the company hurt in any way. So it's never from where you expect it. And the number one thing you can do is internal controls. The more difficult you make it, the more oversight that exists, the less likely it is that somebody's going to want to try to fight that system. Typically, they're looking for the quick buck. They're not typically looking for the long con. So
Yeah.
definitely the internal controls.
So talk a little bit more about internal controls because I have those conversations with our clients, and that's a very accounting-y term, internal controls. So spool that one out a little more. What are some of your favorite internal controls that you see implemented?
Yeah, I wish actually we had more time to dig into this one. I know we have to be coming up on time here, but um, my favorite thing to do, honestly, I like double sign off on time of service collections. I like locking cash bags. I like having. I still love carbon copies for deposit slips because I love the reconciliation between the carbon slips and what was deposited and what the bank statement says and what my general ledger says. But having each individual at your front desk be responsible for what they're documenting is one of my favorites. And then if I had to pick another top favorite, it would be for any credit card that is stored on file, for it to, because of PCI compliance and also just it's good practice, to have the majority of that credit card number hidden at a place that you cannot get access to, period. Once you have put it in there, it is in there. And if you don't want it in there anymore and you need to redo it because it was wrong, fully delete it. Not where you can click a button to see it. Just fully have that hidden once it's been entered is probably my second favorite best
And
practice.
yeah, and that would apply to credit card on file as well.
Yeah. Oh, that's a great point. The PCI compliance for credit card usage, and so no credit card numbers written on sticky notes, I'm hearing. Oh.
Hopefully not. Let's try to not. Let's try to not.
We see that. We see
Yeah,
that all
hopefully
too
not.
frequently.
We've
Yeah.
seen it all.
Yeah.
I
Yeah.
there was a practice, what, 2 3 years ago. They had a clipboard. Somebody get the credit card clipboard.
Wow.
That's a phrase I never want to hear again.
Yeah. Yeah. I'm afraid all three of us have far too many embezzlement stories. So as I said, we'll have an upcoming podcast with one of our favorite forensic accountants, who unfortunately does a lot of work with medical groups and dental groups who have been embezzled. So she goes in after the fact, and we'll talk more about that dark side. I'd love to bring it back to a little bit more positive side of the world, and that is to think about key performance indicators. So, how would a physician know that his or her practice is performing well? And what are some of your favorite dashboard items?
Ooh, fun topic. Um, let's see. I would probably say for me, it would have to be looking at the days between date of service, date of entry, date of claim submission, and date of final determination. Looking at those for me is really telling.
Yeah. Yeah, another KPI that many folks may not actually look at is going to be the number of days it takes to close a note. Now, that's not a typical key performance indicator for, the Taya and I, when we think about KPIs, we think of a lot of, technical financial KPIs, right? But what we also want our physician leaders to take into consideration is that note closeout initiates the claim submission process, right? So we can't do anything, or we should not do anything until that note is closed. So how long, this is a question for your audience. How long generally does it take you to close your note? Right? Because all the KPIs that Taya just mentioned are, built upon that note being closed out and ready to be submitted. Because before we can do anything, we need to make sure the note's closed. We need to take a look at coding. We need to do some scrubbing for payer edits before we submit that claim. So it really also kind of goes back to our physicians and making sure that they have a process in place so that we can give the best KPIs.
I want to conclude the conversation with a big thank you to Kim and Taya for joining us today and sharing all of their expertise and background in revenue cycle management. Wow, I loved the conversation. I hope that you all will join me next week for our next episode, which will be a bit more detail about reimbursement, RBRVS, RVUs, and other alphabet soup. You can find more information online at medicalmoneymatterspodcast.com, and you can subscribe to the Medical Money Matters content website for physician leaders to find budget templates and many other tools. We've included those links in the show notes. As I like to close out these podcasts, congratulations on taking the next step in your professional development and for making the commitment to learn about the financial and business aspects of your practice. I look forward to being on this journey with you and send you my heartfelt gratitude for all that you do for your patients all day, every day.